Good day, traders. Mindset reset. It's Monday, day one at the beginning of a new trading week. Today, I'm going to answer some specific questions that came up today, and I'm also going to talk about day one, the opening range, and I'm going to also talk about our week ahead, which is full of major red news. Now, an excellent question from an individual today regarding the video that I put up earlier. It was an interview with me. One of the questions that came up about that was, when did you have the breakthrough or the mindset when you realized the aha moment that you could figured out how to trade? And my answer to that question was that from the very beginning, as I talked about, I had some excellent education from an individual named Brian Costello. His pen name was Stuart Moore. And we were learning end-of-day trading, currency markets, shares, as well as futures. We had two trading models that we followed. One was a shorter term, meaning a momentum 2-3 day type trade, and the other one was a position trading in a market that could potentially be going on a 1 week, a 2 week, or a 3 week type move based on end of day charts. Now, I talked about drawing those charts by hand, and I had an intimate relationship with what was happening day to day, and I couldn't wait to get my data each day so that I could draw my open, high, low, and close. And I loved the hand-drawn charts, and I learned an immense amount just from that process in itself. But to answer that question, one of the things that arose out of that was that I had an excellent education, and I was making money in my first few trades, and I was making money over the medium term. But I also was deviating outside of that plan and taking other trades, trying to trade all the time with the belief that taking trades I could make money faster. I didn't have any real understanding of larger time frame, monthly rolling changes. You know, that was obviously when I would be taken out of the market if a market was changing direction. But more importantly, I engaged in other impulsive trading that ultimately would destroy the good results that I was doing when I followed the instruction that I was given. And that was a repeating cycle. And as I learned more about shorter time frame trading, I went to another seminar a few years later with a couple of young gentlemen in Perth who were trading currencies at the time full time. Again, excellent instruction. The markets were somewhat less reactive to some of the major red news, and there were some excellent trading setups based on that. And of course, that was a process that, as everything in the markets, continued to change. But I was engaging in impulsive trading, over trading, trading too large randomly, not taking profits, moving my stops, doing things that ultimately are what will lead to destroying a trading account, which is why I talk about the largest, most important factor that doesn't get any sort of attention. In a lot of cases, people talk about trading psychology. My interpretation of trading psychology is that you either know what you're doing and you do that, and you don't deviate from that, or you don't do that and you engage in random, haphazard, impulsive type trading with no edge in the markets, and believing that if you get more psychology, whatever that is, that might change your haphazard approach to the markets. But that was what my story was. I would build an account up, and then I would do other things and self-sabotage all those results. And like Ed Sakota says, everybody gets what they want from the market. And when did the real question, I suppose, if you dive deeper into that, is when did I finally do something about that? Well, it was a gradual process, because I didn't recognize all the flaws that the market was revealing to me. And I talked about this in the last video, that your results are a reflection of where you're at in your trading. And a lot of traders don't like to face up to that. And that is reality, but it's the truth. Whether it's a lack of actual expertise in terms of an edge, or whether you have edge and you have knowledge and you have expertise in executing an edge, but you do what I did and do other stupid things that destroy all the good results that you've created in the markets. So it's one thing if you don't have the knowledge and the experience and the underlying unconscious competence about what you're looking at in terms of the chart and the price action. And I, as I'll repeat this, I don't care what anybody says, anybody's, that they wrote an algorithm or that they know everything about the market. It's irrelevant if they do. All you need to do is find setups that repeat where it's easy to make money on and you have edge in the market, and then find out how you can find more of those, whether you have a larger basket of instruments, whether you expand the time or you add other easy money making setups into your basket, into your toolbox, and then you master executing them and you master the discipline to not do anything else. And I talk about focusing on scalable setups. Scalable setups are the ones where it's going to be easy to make money on because they're being driven by larger players in the markets. And as many of you know, when you're in that right trade, there is zero stress. There is usually zero heat against you. And they typically will move with momentum from one point to another. And you're in the profit zone pretty much right from the start of the trade. Now, if you're doing other trading, like I talk about catching highs, catching lows, all those sorts of things. And as one trader said to me the other day, Stacey, you really should do your community more justice and start them with the daily time frame first. And my response to that individual is that if you don't understand what the three levels are on the chart, if you understood what those are, you would already understand that we are working from the longer time frame first, because nothing happens until the markets have already broken out, whether they break out on the day, whether they close and break out, whether the week is already in breakout, or whether they're breaking out in the session that you're trading. So those levels, high of day, high of week, low of day, low of week, are where other time frames, as one trader asked today, when we're at all-time highs, who are the other time frames? And so you have to understand that often when we're at extremes, we can have profit taking happening. We can have new positions being built. So we can have traders that are unwinding profitable positions and perhaps potentially building new ones, whether it's in the opposite direction or in the same direction. They take profits maybe on a Friday. Traders call that a first red day. And all it is a down closing day in a market that's already in breakout, perhaps if it's in the long direction. So we can have profit taking on a Friday, and we can have them beginning new positions on a Monday in the same direction of that original trade, which comes to the next point about, I mentioned this morning about mastering a setup. If you're uncertain, or if you've struggled last week, or if you are still thinking it's just about selling highs and buying lows all the time, and you haven't had the consistency to stop trading unless you have your rinse and repeat setup and you're ready to hunt that out. Sit on your hands, be patient, and stalking an instrument that sets up like that. So if you don't have that understanding, it's imperative to not be trading, because if you don't have an edge in the market, as I stated, it's ridiculous to go there and take trades. I know there's gurus out there chasing stuff and telling you that that's where the market's going to go, which is great, except that is it an actual trade setup that's scalable in size, or is it just me saying, oh hey, I know the market's going up today and it's going to close at the extreme? Because that's not an actual setup. And as I talk about, there are two. So the next part of this conversation, I get this question almost daily now. What setup was that? Now there's only two setups on the day. So we have day 1, day 2, day 3. So for example, last Friday, several traders asked, what setup was this? Well, it's a day 3 on a Friday, and we know there's only two types of trade setups that may present in terms of the larger time frame. A trend trade for potential continuation move, or a reversal trade, a parabolic trend trade, a parabolic reversal trade. What type of template should I get in a well-engineered opportunity on a day 3? A dump and pump or a pump and dump? As I stated on Friday's community post, I thought the Russell was a fantastic textbook dump and pump opportunity right for the New York Open that exploded to the high of the day, the high of the week. I believe it was the high of the week. And again, several traders asked, what setup is this? So understand there are only two setups. Only two, a dump and pump and a pump and dump. Now the larger template will dictate, is it a trend trade or a reversal trade? Which means that you either have an instrument that is well engineered on the day for a continuation or a reversal, if it's a low of the week, high of the week. What setup do you have? Or is it just a chart where you're up high and down low and there's actually not a well-engineered template and you get caught into a market that might move in your direction, but where's the scalable opportunity where it's driven by other time frames? So differentiate getting a direction right versus an opportunity that's scalable because it's being driven by other time frames. Big difference. Catching a move versus an repeating scalable opportunity. So as we start the new week, going back to the first part of this conversation, reinforcing the mindset part, which is don't engage in impulsive, irrational, and emotional activity that can come unglued, that can cause you to self-sabotage the good results that you're producing. You know, building up your account, doing everything right, and then one bad error in judgment or impulsive trade can end up leading you into tilt or doing things that you wouldn't do in a normal trading perspective when you're executing your trading plan. And that's the life of a discretionary trader. So for those of you who are out there who think that somebody else's statistics will show up on your trading account, if you can't actually engage in trading execution live in terms of your skill set, managing your own behavior, which is why I repeat, it doesn't matter what anybody's results are. You can have, unless you're running an EA model, if you're a discretionary trader, if you think somebody else's statistics or their P&L will actually transfer to yours when you may not even have any expertise of execution or self-management of your own behavior, it's critical that you build that through your own repetition of flawless execution and self-discipline and self-management, which is easy once you understand where your trading business easy money setups are built on. Rinse and repeat, rinse and repeat. Don't do anything different. If you can make money on days that it's easy to make money, why would you do anything else? And if you can't find that or you don't understand that, you shouldn't trade until you have an edge or where you see an edge. And that's not, oh, it's up high, I want to sell it, or it's down low, I want to buy it. Where can you put size into the market? And that's my perspective. And if another guru doesn't like that, or they think that they wrote an algorithm, who cares? The same setups are going to happen over and over again, and that guru can't stop you from building your trading account. So understand where you have edge, understand where you're going to make easy money, whether it's on the front side on a 3-session setup or whether it's on the back side on a 3-day setup. And sometimes you can get a 3-day setup on the front side, high of the month, high of the week, low of the month, low of the week, whatever that may be. There are opportunities all the time. And it's so important that if you don't know what you're looking for, to just sit on your hands, study, be patient, find that niche that you resonate with best, as I talked about. It doesn't have to be exactly the way that I do. There's many ways to trade the markets. I'm focused on the areas that I feel are scalable, that repeat, that show up on pretty much any instrument, and there are a number of opportunities on a weekly basis. All we have to do is find them. So keep it simple. The simpler you make it, the easier it is for you to reproduce. If you're following a bunch of markets all the time and looking for trades, that can get harder and harder and harder to show consistency at, and also the behavior of the trader. So keep it simple, traders. Make it a pursuit of pleasure. As Paul Tudor Jones says, make it a profitable pursuit of pleasure. Focus on the trading setups, where it's almost impossible for you to lose on. And if you don't know what that is, again, I'll say this in closing, if you don't have those results and you're 50-50, that means you should stop trading, because there's 50% of your trades are losing trades, which I joke about saying, stop taking losing trades and only focus on the setups where you make money, and it's easy to do that. Easy money making trading setups. Don't do anything else. Find the same setups, trade those winning setups over and over again, and if you don't see those setups, don't trade. Make it a strong week, a smart week. Be patient. 1 or 2 great parabolic opportunities is all you need to significantly compound your account. Have a great week, traders. Keep it simple. We'll have a technical video out tomorrow or Wednesday. We're going to expand on the creating your watch list, just focusing on the highest probability candidates. And if the trade sets up, it's going to be a well-engineered template in a pump and dump or a dump and pump template opportunity. Have a great day, and may the markets go with you.